Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Scouten, jumping into the charts on this Wednesday, October 12th. So we got the PPI numbers, which came in slightly hotter than what most people expected, but it wasn't that bad. Core PPI was down slightly. With that understanding in mind, the big headline number tomorrow is the CPI print. Now that comes in at 8:30 a.m. tomorrow, so you better be ready for the pre-market alerts. In the event that we get big pops, we will look to offload some of our long positions. In the event we get big drops, obviously looking to offload some of our shorts and accumulate for a technical bounce, because the markets are still oversold. However, markets can continue to go lower despite being oversold, but we just have to take our shots where we see the best technical setup. Overall today it was a pretty good day for us. We netted quite a bit of winners in day trades, as well as our swing trades were working for us. We saw some strength across the Chinese sector, and that's part and parcel probably due to a couple factors. The stimulus that the PBOC is starting, as well as the dollar did start to soften at periods in the day, and just due to the technical levels that some of the Chinese stocks had hit. So with the SPY falling today down 0.33, there was so much resistance today that the markets were really struggling, especially the S&P, to try to break out of a range. And that's probably because of the conviction. No one's sure what the CPI print is going to be. Obviously no one has a crystal ball. But with that understanding in mind, I think markets are oversold. Certain indicators that I'm seeing are showing potentially either a number in line or even slightly less, which should rally the markets. Now, I could be totally wrong, but the probabilities and the certain signals across multiple sectors analysis, as well as how extended yields and the dollar is, and just the overall distribution signals that I'm seeing across the yield and currency markets is really fascinating to watch intraday. But the S&P finished down in the day. You can see this is where we had a gap up. Markets were actually very strong in the futures on the dollar softening, as well as yields, and then that kind of reversed, and this is why we started to sell off, because the dollar started to rally up higher, as well as yields started to push up higher. And if we simply look at the dollar today finished with a bit of a doji, and dojis are known for distribution signals, and especially since this doji happened where you made a new high and then you closed back on yesterday's high. So to me, again, massive distribution signal. You have had 1, 2, 3, 4, 5. You've retraced this heavy down move pretty substantially, and I do think you still have to hit the lower end of this range again before the markets can continue to make a move up. But honestly, for our long positions, we don't need the dollar to fall much for these markets to catch an underlying bid. If we simply look at the intraday market analysis of the dollar, it was pretty crazy price action. I mean, here you have the dollar ripping, and then you got a little bit of a reversal, bear flag, breakdown, another bearish consolidation, breakdown, and then the market started to rip higher, kind of putting a little bit of this basing formation. But the choppy price action in the currency markets, especially the dollar, represents that lots of distribution is happening, where typically smart money, the people that got in the dollar trade early, maybe like down here or even down here, are now dumping into the newbies, since the media has been pumping the dollar. And overall, when you start seeing these massive moves intraday without any real consistent trends or patterns, it's showing distribution. And to me, that's a big signal. I love distribution accumulation signals, and that's certainly what I'm seeing as an intraday analysis, since I've been watching the screens, for pretty frequently, pretty much every day for the last few years. So with the dollar putting in distribution, what does that mean? Potentially that we could have a good CPI, potentially it could rally the markets. There's another signal that I'm watching, which is this downsloping wedge pattern. So that's currently what the S&P is trading in. And if you look at this downsloping, this is why markets are so fascinating and intriguing, because they test people's breaking points. They tend to push even technical analysts to the breaking point where we potentially see a breakdown, like for instance out of this wedge to the downside, but you did not get that confirmation signal, and look where you've managed to close, just right back on that wedge. So if anybody knows anything about downsloping wedge patterns, From a technical standpoint, let me just turn this volume off. And by the way, the volume was around 72.9 million, so slightly less than the last few days, which means that I think the sell side action is really starting to abate. And if we get a number in line that doesn't shock the markets, I think we can see a little bit of a relief rally as we head into the midterms. But downsloping wedge patterns tend to break to the upside, despite many people thinking they break to the downside. Now, what this could represent here, this little candle, this could be a failed breakdown, and the biggest moves comes from failed moves. So if the markets were trying to break this pattern down and it failed, then it's likely that we're going to head to the top of this range for another chance to potentially break out. And that's what markets do. They either try to break out or they try to break down. And if the other outcome, if one of the outcomes doesn't happen, it's likely that you're going to go test the other outcome. So obviously the markets will make their move tomorrow morning. So that's kind of what I'm expecting and waiting for on the indices and overall stock market. As soon as that CPI comes out, algorithms will be trading. The markets will probably have a big swing to one direction and then another direction before making its move to the official real direction. So if we look at the daily chart, I'm just going to erase these two wedge patterns. Just bear with me. So if we look at the daily chart on the S&P, you are holding yesterday's low, which is certainly a short-term positive. You've now had 1, 2, 3, 4, 5 down days in a row. Despite holding yesterday's low pivot, you still made a closing low, but it's inside that candle, so that's short-term positive. Obviously, your first big resistance, in my opinion, is going to be this downsloping trend line. I think markets can have a bounce. They could potentially have a really, really strong, maybe 2 or 3 day rally. As soon as they get into this resistance, there's going to be met with sellers. So this bear market bounces that we get are not designed to stick around. You do know that we have a downside target of 344 around here on the SPY as per this little bit of a breakdown formation. And then ultimately, we do think we test the pre-COVID highs, as many charts are certainly starting to do that. But I'm still favoring that we get that breakdown. If you look at some key sectors, XLRE is still holding that technical level that we put out an alert last night to. And this is key because real estate is extremely oversold and the most sensitive to interest rates. And the fact that interest rates continue to rally, but real estate didn't make a new low, is a short-term relative strength positive for the market. If we take a look at utilities, utilities is the sector that's really concerning me. We identified this breakdown, confirmed a breakdown on this candle. But the concerning thing about utilities is when utilities start to free fall, which you can argue this is starting to free fall. Let me just go to a longer chart, the weekly chart, so we can get a better sense. When utilities start to free fall, and that's certainly what's happening, 1, 2, 3, 4, 5 weeks down in a row, you're approaching that 200 weekly MA. What typically happens is utilities are a good signal for a massive, massive decline to occur. But when utilities switch from the leading sector, which they were for pretty much 2022, to an extremely underperforming sector, generally money rotates out of this defensive sector for a short 1 to 2 week period into the more risky assets because this sector is now falling sharply, whereas those other sectors typically have a 1 to 2 week bounce as money rotates out of utilities. But the intriguing thing and the dangerous thing about utilities falling is after that initial 1 to 2 week bounce in the risk assets, utilities has a strong correlation once breaking down from key levels to potentially signaling alongside with some other signals in the market that we could be seeing a massive drawdown occur after that 1 to 2 week potential rally. So even if you look here, this was a massive key level. Utilities started to outperform the market right ahead of COVID, and then you had an initial breakdown from your key trend line. You had a little bit of a bounce, and then you just started to sell off. So utilities are kind of in that same scenario where we've broken a key trend line, which was our QE channel, our wedge, and now you haven't had your initial bounce from the breakdown level. So I still think we get a bounce, maybe not even back to this level, but I do think utilities get somewhat of a bounce, and then we start the next down leg. But whenever utilities break key levels, even over here, and started having vicious sell-offs, it indicated a nasty, nasty market sell. There were a few other occasions going back there, but utilities are a very extremely important sector to start to watch and analyze. Let's just take a look at the US 2-year yield to see what transpired there today. So if we flip to the daily chart on yields, I have to zoom in because yields, that's the crazy thing about yields. They've made such a sharp move that we have to zoom in so much to see any type of, let me just erase some of these trend lines, shall we? So yields are interesting because on the 2-year yield, let me just flip to, you can see we've had 2 down days, but I'm going to flip to the 4-hour chart just so we can see. You got your gap fill, which you're still holding above, so that's technically bullish consolidation occurring. However, if you lose this downslope or this upsloping trend line, which was basically your breakdown level that sent you below the range, if you come down and lose that level, your next support will be on this downsloping channel. But I do believe yields are starting to, again, also put in distribution signals with the extreme volatility that is occurring. I mean, very, very volatile in terms of how yields have been moving. You have like a high over here to a low, to another high, to a low. So extremely volatile price action, very, very unsettling for bond investors and traders alike. But that's certainly why we're getting such volatility in the markets. And yes, in terms of utilities breaking down, I do think we're very, very close to a potential breakdown, and it's certainly there's a few things that I'm paying attention to. One of the reasons I think we're also potentially getting a breakdown is if you draw a trend line, this was your major pivot. You had your first major pivot here, which you broke and confirmed. Then your next major pivot was over here, which again you were unable to hold above and close and confirm. And then you have your next major pivot over here, which now you're really testing this in terms of this momentum trend line. The degree and angle is slowly starting to break down. So if tomorrow we confirm and break down below this yellow channel, then I do think it's very, very likely that we slice through the support and head to the low range of this downsloping trend line. So when your trend keeps changing to less and less of a degree, you have to really start paying attention. Is this a consolidation pattern or is this a potential breakdown pattern occurring? And I think it's the latter, the breakdown pattern, just due to the fact that breakdown patterns typically happen at the highs of the charts and specifically at decent double top resistance. Let's take a look at gold because that had a little bit of an interesting price action. You did get a slightly positive day. Gold was at the highs, pulling off slightly from the highs, but nonetheless up 0.4%. And this is kind of make or break point for gold. I think we're either going to get a rally to the upside if the CPI basically comes in better than expected. I think these types of assets will perform despite many people touting gold as an inflation hedge. And then if the CPI comes in bad, gold's going to sell off naturally because everything gets sold off. If we take a look at silver, silver had yet another down day, but it did finish off from its lows. I do have another accumulation add level around 1872. In the event that we have a sell side action, potential initial dip and then reversal up, be ready for a potential silver alert. I'll be looking to add around this 1872. You can see it's this downsloping pivot to here, would intersect somewhere around there. You also have a secondary level support, which will be a pivot to your pivot, and then somewhere intersecting on this level. So a couple key levels to watch, but silver is now 1, 2, 3, 4, 5 days down, 6 days down in a row. So you know what that means. The probabilities are now swinging in favor for us to get a potential bounce. If we take a look at the USO, I'm going to touch base on the USO because I think it's a very intriguing chart and it really sums things up clearly. So the USO, this was the trend line we were watching for resistance. Boom, boom, which you tagged. You see you got your reversal off of it. Now the interesting price action in oil and why many oil traders are now thinking that oil is actually bullishly consolidating, where I see it differently. I see oil now in big, big trouble on a technical basis, especially after today's price action. And why? Well, there's a couple reasons on a technical basis. First off being, here's oil's low. You had your rally into resistance. You broke above the 200 moving average, which sucks in so much new money. Markets love to do this. The technical signals on chart programs turn positive. Buy signals. you got a nice move to the upside, and then they start reversing it. So what do we know? Whenever you break above our level, you need that secondary close and confirmation above, which you failed to get, and now price is reversed and then reversed again, and now you've closed back under this original resistance trend line. This is horrific for the price action of oil. The fact that you've now closed yesterday below that trend line and confirmed it today solidifies it to me that oil is most likely probably heading to $58 a barrel. And sure, we're probably going to get a technical bounce there, but I do think oil has a very, on the USO, has a very strong chance of now heading to 58 over the next, say, within the next 3 months, or sooner, for the might add. But obviously there's going to be stopping points along the way. You've had a 3-bar surge to a low, which you finish off the lows, but there's still some technical gaps that you need to fill, like over here. But I do think a move to the low end of this channel, which I'll just slightly adjust, is probably very likely at this point in time. So obviously this is a downsloping channel. I do think that'll be a level of support, which we could potentially play just depending on how this pattern gets into here, and then potentially play for a bounce into our resistance. But lots of little signals here. Oil's in trouble. If you look at energy too, natural gas just so happens to be breaking down on the same day as oil. So natural gas has been holding this trend line that we've been watching. It has been making this little bit of a bearish consolidation. And the interesting thing is that this is heading right into winter, where most people would expect, oh, natural gas is going to fly, Ukraine-Russia war tensions, people are going to be using so much natural gas, yada, 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 yada. And this is just how the contrarian and outside-the-box thinking approach needs to be taken into account whenever you're putting in any capital towards a trade or investment. And noticing that this head and shoulders has triggered, we have not even fulfilled the downside level. But the thing about this downside level, I would not even buy it anymore. Why would I not buy it? Because we've had so much consolidation here, and this should make a sharp move lower. Now, I'm not ready to short it just because it is kind of a 50-50 setup, and the fact that you had 1, 2, 3, 4, 5, 6, 7 down weeks now in a row, obviously with 2 days left in this candle, I can't chase price action lower or higher when it's had such tremendous downside, considering we also did short it from these higher levels over here. So if for some reason we get a retrace maybe back up to the 730, the top of these high pivots, I may consider, I'd have to be a spur of the moment decision. I would prefer a retrace back to this neckline here, but at that point in time, that's probably a pretty big rally, which is kind of unlikely for natural gas to see. I just want to show you a couple other trades. We did pick up FTS, so Fortis. So Fortis is the most oversold it has ever been in its stock history. And take a look at this. We picked it up here around 34.77. A couple reasons. It's so oversold. Basically, you're on a beautiful measured move lower. If you flip to the weekly chart, let me just show you this weekly chart of FTS. So I do think we're starting to accumulate in a very healthy position. This type of sell-off is very reminiscent of this COVID, but look at the support levels you're coming into now. So you have this major pivot on an extended oversold move without any bounce. That is a terrific accumulation level. You do have a secondary pivot level over here, which we could tag. It does coincide with a weekly gap fill, so that level could be also hit, but this is the levels we start accumulating at for when that mean reversion technical bounce comes. It will come very sharp. But to think that this stock has had, without any bounce, this stock has fallen now 25%. If it was to rally back to the 24, you need to rally 34%. So I do think these stocks will get some sort of a mean reversion bounce. If you throw up the RSI on the weekly, it's never been this oversold. This company's been trading since 2012, so a decent amount of track record. But I love these conditions as a technical analyst. It's a quality company. It's 40+ billion still in market cap, so it's not like it's a smaller, small cap. But nonetheless, Fortis is, I do think it's primed to potentially have a technical bounce. And just based off of this rate of change move, the oversoldness of the market, the oversoldness of this sector, it does shape up to be a pretty good one. Added to our para yesterday, so let me just bring up that chart. Paramount Global is acting pretty well. If we flip to the daily chart, you can see that it's had a beautiful, beautiful reversal. The importance of this reversal, let me just turn this volume off. The importance of this reversal is the fact that you made a new low and then you reversed and closed above yesterday's low and yesterday's kind of your pivot zone. So that's a short-term bullish sign. This is still a stock that I love, extremely oversold into key support levels. A quality company with the assets that it has. Obviously, I don't even care about in terms of what the assets are. We're traders. We just care about short-term price action, and we don't really have to worry too much about the fundamentals. But nonetheless, it's still nice knowing that you're in a decent company who has a lot of media power and attention and user membership base. So with that understanding in mind, we are positioned still for a market bounce. If we look at AMD, we're holding a pretty big position in there. Accumulation signals, most people would assume that this is a bear flag forming. I don't think it's a bear flag forming, just because you most likely would have confirmed below this level and you have not done that. I'm seeing lots of accumulation going here, especially since today you closed, it was your highest close in the 3 days that this has been. So what this is telling me is that buyers are slowly starting to come back in. Obviously there wasn't much conviction to begin with, considering the long-awaited anticipation of the CPI tomorrow. But in terms of the signals that I'm seeing, just like I'm seeing distributions in the dollar, I'm seeing accumulation in semis, AMD, SMH here. You did finish down today. Again, oversold. Look at this move from 247 down to 175 into key levels, massive retrace zones. These are the levels we take shots at. And even if we look at, say, Okta. Okta is one that we picked up as a swing. We've day traded it successfully. But look at this beautiful, beautiful move on Okta. Let me just erase some of these lines here. But you're getting a little bit of a bottoming tail here. So that is extremely important to observe, that we got a bottoming tail. It does have a decent amount of volume, more than these two previous sell candles, so more than these wide range red bars, which shows you that now money is accumulating. You got a nice reversal, so you're starting to see money flow back into the semis, which is also a leading indicator for the overall market. Even if we look at Nvidia, we own Nvidia as a day trade, so it's a pretty decent sized position at this point in time. But Nvidia, you're at these key support levels. When you look at Nvidia, it was at 190, now it's at 114. That's almost a 40 to 50% drop. But Nvidia is trading in this parallel channel, connecting your pivot to a little bit of chop over here, another pivot low. You're into this pivot low here now, which should be acting as support. And considering that you're still holding yesterday's little bit of a doji reversal, is a short-term bullish positive sign. I still think Nvidia with a positive CPI number can have a bounce back up to this 131, which would be a pretty substantial gain. And if you look just at where we are trading on Nvidia, we have pierced the COVID lows here. Or sorry, that's not the COVID lows. My apologies. We've pierced this multi-month consolidation over here, the lows. And that's where we're now starting to accumulate in Nvidia. Not only has Nvidia had 1, 2, 3 surge to a low, it's also had 1, 2, 3, 4, 5 weeks of consecutive downside. And this type of bleed lower in a quality company, most people would assume this pattern is bearish, which obviously it is, but as a technician you have to look through sometimes the longer term patterns and identify what type of pattern is this going on. This is not even a bear flag. This is a descending wedge, which is likely to break to the upside. And if I just remove this channel and we draw in a little bit of a wedge pattern here, you can see that wedges, downsloping wedges, have a tendency to break to the upside, especially in an oversold condition at massive technical support. So I like the fact that we're accumulating semis here. I think it is going to be the leading market mover as we head forward. I'm just going to scroll through to see if we can touch base on anything else. Oh yeah, there was our one stock, Cannabix Technologies. a massive, massive mover today. I mean, we're deep in the money on this stock, but look at this. You know, when you start seeing these assets, it was up 25%. It was up even more today. But this is a beautiful one we hold now. Our entry is 29 cents. And I still think it has more upside, but we're deep in the money, about 39% in the money on that trade. So that is an epic, epic winner. You know, again, let's just recap why we have basically picked up this trade over here. So this type of chart pattern, again, you were coming into your massive, massive support zones. If I simply bring this up here, which connects your pivots, your pivot zones over here, which you hit off of, boom, you've reversed sharply. And you're into massive, massive levels where 2016 pre-speculation hype, you know, look at these massive technical pivots to pivots to pivots in an oversold condition. Symmetrical move basically from this high to this low. This high to this low is the same distance, and you're extremely oversold. And now, just from reading the charts correctly and buying into support, we're deep in the money on this trade, which does show me that this type of price action is one of two things. Either you start to see these speculative investments, and don't get, this is totally speculative, cannabis, marijuana breathalyzer. When you start to see these speculative investments start seeing money flow, especially in days before a long-awaited important economic event, or when you see down days in the market, it is the relative strength, and it's showing that risk is starting to basically abate in the markets, and people are now willing to basically throw money at more speculative plays. When you see speculative investments turning around, and you also saw this in the likes of CVNA, Carvana. You know, look at this beautiful, let me just erase this. Carvana, look at this beautiful, beautiful signal here after tomorrow. You also saw it in AMC reversed off the lows. It was extremely bad and flat on the day. And then if you look at the lows, AMC, which I was trading this by myself, extreme positive bullish move off the lows. You know, BBY. You're starting to see the risk assets, beautiful positive day in a weak market ahead of a long-awaited CPI. So when you start seeing money flow into risk assets ahead of important events and in weak markets, that is a sign that potentially we are due for a short-term bounce in the markets. And this is what intraday analysis and my time is spent throughout the days, looking at different ways I can analyze the markets, seeing what observations and correlations and trends I can make, and just seeing where overall assets and sectors are in terms of support. And we're certainly hitting big supports across a multiple array of sectors. And I just love the fact that the meme stocks, the risky stocks, have started to outperform based off of today's price action and yesterday. So little observations like that, I think it's highly intriguing. If we take a look at Bitcoin, we're still trading our Bitcoin short right now, flipping to the daily chart. Basically, oh, I don't know what chart I picked here. Oh, double D. Double D's. Can't have that on the Bitcoin chart, can we? So Bitcoin is basically holding this key support zone here. You broke your first one, which I'm actually going to take away now, for now. You broke your first one, but you have not confirmed below. Bitcoin is still trading underneath these key trend lines. If Bitcoin can recapture this downsloping trend line, then it may have a short-term move. But honestly, Bitcoin's waiting for that CPI as well. So it seems, and I think it's either going to be a bounce for Bitcoin, considering it is oversold, or it's going to be a big drop for Bitcoin down here to about 17,000. So time will tell, or 17.6. But obviously, if I'm bullish on the markets, there is the chance that Bitcoin could pop. With that understanding in mind, this is why we've moved our stop loss to break even. We're slightly in the money on our Ethereum trade as well as our Bitcoin trade. The price action is still bearish, but because that Bitcoin hasn't broken down, it's just been stuck in a range along with the markets. I feel that the technicals are waiting for that fundamental move in the markets, which is the CPI print. So let's just keep that tight stop loss. Don't let the trade go against you. We may see a big rip, which I'd love to start shorting again. But if we don't, then obviously we'll be positioned for a drop on Bitcoin and Ethereum. So With that understanding in mind, excellent job today. We did finish up on the day again via our swing and day trade accounts, new highs on our accounts. So excellent job. It was pretty wild, but tomorrow 8:30, be ready, pre-market, and we'll just have to take it basically candle by candle. With that understanding.